Hello and welcome to another Smaulgld live stream. It is Christmas, December 25th, 2018. Merry Christmas, Bon Natale, Feliz Navidad, a good Yule to everyone this evening. Tonight's topic, Trump says buy the dip. Now we've had stock market carnage through the month of December, one of the worst months in recent history. And today, Donald Trump is out saying that, well, it's time to buy stocks because they're oversold. Now, we know that Donald Trump has had a problem with the Fed. He's been complaining about the raising interest rates. He's been bragging about the strength of the economy. He's also been bragging about the stock market. Well, now he can't brag about the stock market, so now he's out there trying to pump up the stock market. We're going to talk about what he said today, why he said it, and then we're going to go back and just recap what happened over the weekend or prior to the close down of the government and the Secretary Treasurer's Munchkins, his calling of the plunge protection team, his calling of 6 large banks and asking about their liquidity, put shockwaves through the market. And then we're going to take a look at where we might think things are headed and also do a little speculation that we've all been doing for the past few years about when all this day of reckoning, so to speak, happens. But first, let's take a look. The gold and silver markets are indeed open, and gold looked like it's getting a little bit of a bid. $12.72, up $3.20, and silver also up a little bit, up 6 cents to $14.80. Dollar index pretty much flat. Over on the cryptos, we had a ferocious rally that basically reversed itself entirely. I think 2 days ago, it rose about 10-12%. Bitcoin did, and then immediately fell about the same. But right now, over the last 24 hours, Bitcoin at 38.31, up 0.04%, pretty much flat. Bitcoin Cash 182, up 11.5%. Ethereum at 133, up 2.67%. Litecoin at 31.80, up 3.18%, and Ethereum Classic at 492. That is up just about 3%. So let's get into our topic for the evening, which is Trump says buy the dip. Uh-oh, we got a moron here.
Presenting the distinguished international news commentator and foreign correspondent,
Smaulgld. This has been an extraordinary week in world affairs.
No, I told Hillary Clinton that that's moronic.
Oh, yes. I've been listening to a lot of Christmas music. Louis Armstrong. Hello, Dolly. This is Louis. Dolly. Is that you, Santa Claus? I thought that was hysterical when he said, is that you, Santa Claus? For those of you who like Louis Armstrong, better know. Actually, he's known as a vocalist, but also a top-notch trumpet player. All right, let's get into Trump says buy the dip. Before we get into what Trump said today, let's just recap what happened over the past couple of days. Now, we all know that the stock market's been heading down, and Trump had been complaining about the Fed, that they're raising interest rates, and been bragging about the economy, bragging about stock market. That's all gone. Out of the blue, then, Trump, Secretary Treasurer Mnuchin, I always call him Munchkin, it's a lot easier to pronounce and easier to remember. He issues a tweet, and we'll just throw it up here on the screen. And he says, today I convened individual calls with the CEOs of the 6 nations' largest banks. Okay, now who asked him to do that? We'll find out. No one asked him to do that, but we're going to see. So he puts out a statement attached to his tweet. And he says that he conducted a series of calls with the CEOs of the 6 nations' largest banks. Not the 6 nations, the 6 largest banks in the nation. And he mentions he called Bank of America, Goldman Sachs, JP Morgan Chase, Morgan Stanley, Wells Fargo. And they confirmed that they have ample liquidity available for lending to consumers, business markets, and all their market operations. Now, that's nice to know, but no one thought that there was any issue in the first place why they would have liquidity issues. Apparently, they recently passed stress tests, and we've been hearing from Janet Yellen everything is fine. We don't have to worry about it. A lot of changes have been made. They got better capital requirements. So this was supposedly meant to assuage the markets that everything is fine. But the fact that he actually has to call them some San Cabo de Cabo, wherever he was in Mexico on vacation, did not help the markets. And I think the markets fell about another 653 points 2 days ago on Christmas Eve. He also confirmed that they have not experienced any clearance or margin issues and that the markets continue to function properly. Okay, thanks for the check-in. Then he says, tomorrow the secretary will convene a call with the president's working group on financial markets, which he chairs. This includes the board of governors of the Fed, the SEC, the Commodities Futures Trading Commission. He's also invited the Office of the Comptroller of the Currency and the Federal Deposit Insurance Corporation. Well, that's a good one. That's whether the banks have their money available for your deposits to participate as well. These key regulators will discuss coordination efforts to ensure normal market operations. Now, this tells you what we've been saying all along, that these are not markets, these are coordinated interventions, and this is why you have, as we've been saying, the GDP up only 25% in total over the past 9 years, but the stock market up threefold. And then, of course, he has to say we continue to see strong economic growth in the United States with robust activity from consumers and businesses, and that's supposedly why they're raising interest rates, that the Fed says. With the government shutdown, Treasury will have critical employees to maintain its core operations at fiscal services, IRS, and other critical functions within the department. Now, before we get into this idea that he's going to bring together the plunge protection team, let's quickly discuss what that, or explain what the plunge protection team is. Now, I had done a series of blog posts and YouTube videos on gold manipulation and on why COMEX won't default, and I mentioned silver manipulation as well. That one of the things they have at their disposal is not just the exchange stabilization fund, which we'll talk about on another day, but is this thing called the plunge protection team. A lot of people throw that term around, and some people think that that's just like a joke, like Ramp Capital, like it's just some type of mythical body. It actually exists. It's not a joke. It's not a conspiracy theory. It exists. And it exists via an executive order from Ronald Reagan in 1988. And I wrote this. This is a direct pull from one of my articles. It's either from Why COMEX Won't Default or my article on gold and silver manipulation. In any event, it says that they established a thing called the President's Working Group on Financial Markets. And the task of this group, also known as the Plunge Protection Team, the PPT, is to enhance the integrity, efficiency, orderliness, and competitiveness of our nation's financial markets and maintain investor confidence. And this is part of the United States realizing after 1987, remember, since 1971, they had difficulties with the dollar. They finally, through raising interest rates, stabilized the dollar after the Carter years. And then during the Reagan years, it looked like the United States had managed through the petrodollar agreements, through raising rates, to quell inflation and to get a decent economy going. And then the stock market crash hits. So when the stock market crash hit in 1987, October, Greenspan was the new Fed chairperson, and he calmed the markets down by saying he was going to basically pay any price, bear any burden, that he was going to inject liquidity. The Fed stood ready, willing, and able to do so. And that stock market crash did not lead to anything other than a correction. Fell 520 points. That, I think it was October 19th or 20th of 1987, and it quickly rebounded. And it showed that the United States government realized that the dollar was very important, most important thing they have. And secondly, to keep that whole thing going, they needed the markets as well. So the dollar first, then the markets. Without the dollar, you don't have the markets. Without the dollar, you don't have lending. You don't have the whole ball of wax. And the stock market is the second thing they're concerned about. Now, the working group consists of the Secretary of Treasury, that would be Mnuchin right now, Chairman of the Board of Governors of the Federal Reserve, that would be Jerome Powell, and that's the guy that Trump has haranguing about raising interest rates. Now remember, Jerome Powell raised interest rates, but he got full unanimous support of the Board of Governors. Chairman of the SEC and the Chairman of the Commodities Futures Trading Commission. So this is exactly what Mnuchin said he was going to convene. The working group has broad discretion to intervene in markets and shall consult as appropriate with representatives of various exchanges, clearinghouses, self-regulatory bodies, and with major market participants, i.e. the big banks, to determine private sector solutions wherever possible. So, again, if they can get the private banks to do something, to buy stocks, then they don't have to do it. But they generally like to coordinate whatever activity they're going to do. This clearly indicates that these markets are definitely, you can call them rigged, you can call them regulated, you can call them orderly, efficient, but they're not free markets with price discovery. If you saw what happened when the stock market fell when Trump became president, or it was announced that he had won and was the president-elect, the stock market crashed and they came right back up. And we've seen we never really have a prolonged bear market since 1987, and I attribute this largely because of the plunge protection team, that the stock market really is never allowed to go much further. And a lot of people keep saying, yeah, but markets at some point and so on. Well, yes, in a real market, we've already seen they've managed to pull off 10 years of tremendous stock market gains during a period of time when the economy globally and the economy in the United States has been relatively tepid. Some might even say, according to older measures, we haven't even come out of the recession yet, but yet you have stocks at all-time highs, or at least you did up to a month or two ago. So, private sector solutions can mean using banks or companies to buy or sell any security or financial instrument necessary to achieve the working group's objectives. So that's basically what the plunge protection team is, and who knows how many times they've met in the past, how many times they have been meeting. But it's interesting that Mnuchin actually announced this, that they were going to meet, and before they met, he announced that he had called the banks about having this, whether they had the requisite amount of liquidity. And then we find out that President Trump, that he was not clear, Mnuchin did not clear this with President Trump first. This, of course, further spooked the markets. Even though the president is the head of the plunge protection team, former Goldman Sachs guy, Mnuchin did not pre-clear the big bank plunge protection team calls with Trump, which means he called up all his buddies at the big banks and got his confirmation from them, and then he went out and said, hey, there's not a problem out here. Now, Trump was asked about all this, and he appears still to have Powell in his sights. He had a press conference today, and he mentioned that he supports Mnuchin, and he said something like, we'll see about Powell. They're still raising rates too much. But here's the order, just in case people think that I'm just saying this. It's Executive Order 12631, Working Group on Financial Markets, signed by President Ronald Wilson Reagan in March 18th, 1988. And he basically said, this is funny, this is Reagan, free market guy, right? By the virtue of authority vested in me as president by the Constitution to interfere with markets, he establishes, one, a working group on financial markets called the Working Group. They never call it the Plunge Protection Team. That's what it's called by a nickname, but it's called the President's Working Group on Financial Markets. And it's composed of the Secretary of Treasury, the head the head of the SEC, the head of the CFTC. Now, remember, Mnuchin said we're bringing in the FDIC. That's a little frightening because the FDIC is your Federal Deposit Insurance Corporations. That's basically saying, let's make sure if we have a run on the bank and we have bank failures that you guys are ready. Otherwise, what are they doing there? They got nothing to do with markets. They have to do with the aftermath of a market that may go down. And then it says the Secretary of the Treasury's designee shall be the chairman of the working group. Okay, so he reports to the president on this. So that's why I guess Mnuchin went ahead and sorted all this out. And it says the major issues raised by numerous studies on the events in the financial markets surrounding October 19th, 1987. October 19th was the date when we had that 520-point crash in the stock market. It was like a 20% drop. And then they're going to go through and figure out what they might do. So that is the executive order. That's what Mnuchin acted pursuant to, lined everybody up. And let's see what then happened next. So then today, Trump comes out and he says the Fed's raising rates too fast. He's got a lot of problems with what's going on. And then he says today at a meeting with the press that what you're not, This is Donald Trump. This is the stock guy. He used to be a tariffs guy. Now he's a stock guy. He says, what you're seeing now is profit and earning ratios are starting to get to the point where buying stocks is a potentially good deal if you got a long-term perspective on it. Now, that's interesting because he was saying stocks were a good price all along. Now he's saying they're getting to that point. Well, he's just admitted that maybe they were overvalued. It's very interesting that the president is out there touting stocks, basically saying buy the dips. And then he says, we have companies, the greatest in the world, and they're doing really well. They have record kinds of numbers, so I think it's a tremendous opportunity to buy. Really, a great opportunity to buy. So I guess this is huge, is what he's saying. You really want to get out there and buy stocks. Now, what does all this mean? Let's go back to 2015, when they first started talking about raising rates. Most people thought that QE was a disaster, and that basically what they should have done at the end of 2008 when the financial crisis hit was they should have let everything collapse, and by now we wouldn't have all this debt. We wouldn't have had $4 trillion printed. Then we wouldn't have had the ECB copycat QEs and Japan and China throwing all this. We wouldn't have had this sovereign debt explosion that we've had the past 10 years. And market commentators warned that you just can't keep doing this. The Fed realized that, and they said, well, this is eventually we'll wind down the balance sheet and we'll raise interest rates. Now, easier said than done, and of course they put it off, but they finally started doing it. Many people thought they would never do it. That would be QE infinity, that they would never raise interest rates, and they would just keep doing QE. Now, I realize that yes, you cannot do that forever, that it is unsustainable. And I wrote back in, there's a point to all this because we're going to get to what Trump is going to do if the plunge protection team either can't or won't bring the stock market back. And this is something that I discussed with Dave on the X22 report just about 2 years ago, a little over 2 years ago. We're going to get to that, what Trump might do. But this was all foreseen, what was going on. So back in 2015, in June, I said the Fed will raise interest rates. And everybody's saying they couldn't, they can't, they won't, they shouldn't. If they do, everything's going to collapse. And I said the Fed will raise interest rates on the false pretense that the economy is doing well. And that's eventually what they did, and that's what they've been doing, saying that everything's doing great. They knew they had to raise interest rates. And why did they have to raise interest rates? Well, remember, de-dollarization and all that, and foreigners need to buy treasuries. Well, the Fed couldn't stay at 0% interest rate. They needed to drum up some type of demand for treasuries. They needed to make sure that the Fed wasn't seen as some type of reckless central bank. If you're going to have the world reserve currency, let everybody else be reckless. So Fed will raise rates and let the ECB do its first QE. Let Japan take the mantle and print to infinity. Let China do that. But the United States the Fed knew that having gone through $4 trillion of QE, they needed to bring down the whole thing. They needed to raise interest rates. And I said back in 2015, they will raise rates. And no matter what happens, they're going to raise rates. They don't want to become the Bank of Japan that buys 100% of the newly issued Japanese bonds. They want to create external demand for U.S. Treasuries. The Fed's primary concern is to support the U.S. Treasury. The economy is secondary. I don't know if it's a very close second, but the idea is that they need to protect that dollar. They needed to raise interest rates. And when they finally did raise rates, many people were astonished. They couldn't believe that they raised them. But I had said that they're going to raise rates, and then when they did raise rates at the end of December, I said the Fed raised interest rates. As predicted, they raised a quarter rate hike today. We said all year the Federal Reserve would raise rates by the end of the year to stay ahead of the other central banks and to boost demand for U.S. Treasury bonds. And according to yesterday's Treasury report, it's clearly in decline. The Fed's policy is focused primarily on protecting the United States' most valuable asset, the dollar. That's why when people keep saying end of dollar hegemony, the Fed is well aware that if it's going to be the preeminent fiat currency, it has to have higher interest rates, it has to unwind its balance sheet, and they got to get rid of debt, even if they have to sacrifice the stock market a little bit here. Now, I think Peter Schiff says they'll sacrifice the dollar for the stock market. No way, Jose. Other way around. They'll sacrifice the stock market for the dollar if they have to, but generally they never have to because they can keep boosting the stock market too. But you have to think about, will the major banks, are the major banks in favor? Will they take a loss? Will they allow the stock markets to go down if it means hurting Trump? We're going to get into that because Trump may have a few things up his sleeve. So the Fed's policy is primarily focused on protecting the U.S. most valuable dollar. Okay, we mentioned that. Then they raise rates again, and I even said that they will raise rates again. That's what people thought, one and done. They'll never raise them again. Then they're going to do QE4 and so on. And let's see here. Now that one we did already. Let's get rid of that. Still got that Louis in my mind. I got to get rid of that and get focused on what I'm trying to show you guys here. Okay, then I said in May of 2016 that the Fed has to, they'll raise interest rates again. A lot of people said they wouldn't. And again, they raised them again at the end of 2016, and they raised them 7 or 8 times in 2017, 2018. Now, what's going to happen? Clearly, Trump is against raising rates. Before he got elected, he thought that was the right thing to do. He thought we were in a bubble. And then he got into the updraft of the bubble. He claimed the bubble. He owned the bubble. The bubble grew bigger, and he was saying, this is wonderful. Now he realizes, we got a moron here. He's in a lot of trouble because he staked his claim to this. And perhaps many of the powers that be are circling the wagons and saying, okay, let's bring this down. A lot of people always said, it's a fact. If they didn't have the plunge protection team, the exchange stabilization fund, central banks buying, like Swiss National Bank buying stocks, you never would have had companies like the FANGs and the Teslas. It's interesting. I mentioned Tesla has no earnings. Trump was specifically saying there are companies out there that are good value. We're going to get to that, why that's his ace up the sleeve, possibly. So you wouldn't have had these tremendous rises in the stock market. And that's where everybody said, this is a fake market. Yeah, no kidding. But the idea is it's fake, but that is the reality. The market is manipulated, and they do manage to make stocks go higher, even if they don't have earnings. This never would have happened before 1987. You could not go, even in the early 90s, you couldn't go public with a company. There wasn't a rule against it, but there was no way anyone would buy a company, a stock, that had no earnings, no projection for earnings. Generally, you had to have 3 or 4 years worth of earnings, and generally they had to be accelerating earnings and accelerating revenue. Today, you bring out companies, Snapchat, you don't have to have profits, you just have to have eyeballs or whatever, and that doesn't seem to bother anybody. All right, now, that makes it especially a problem for certain companies, certain parts of the country, and what you would call the coastal elites. And what do I mean by that? Well, I've railed against a lot of these companies like Zillow. They don't make any money, never made any money. And yet they have these, this isn't investment advice to short anything or buy anything. But there's a lot of companies out there in Silicon Valley and other companies that have no earnings, never had earnings, and yet have multi-billion-dollar market caps. Makes no sense, but that's the market. They go, and the only reason they go up is because they go up. And the chart looks good and they go higher, and companies know this, and if they can raise equity money to cover their operating losses, they do. And they've raised billions of dollars, and if they only have a few $100 million in operating losses, they can stay in business running a loss for 10, 20 years while the stock price is going higher. And as the stock price goes higher, they can do more stock equity issuances and gain even more cash to cover their losses so they can grow more revenue. I mean, if you have $100 million, you should be able to run your business to make at least $50 million in revenue. And if you need more money, well, then you can just raise another $300 million and throw another $50 million at it and get another $30 million in revenue. And it looks like you're growing when all you're doing is just pushing the can down the road, and it looks like you're growing. But your stock price is responding like you're the greatest company ever. And by the time you do this, if you could do it for 10 or 15 years, all the original investors are long gone. They've made a fortune. All the people that worked at the company have made a fortune. And at some point, it doesn't matter if the stock price eventually comes down and the company can exist for 15, 20 years, having never made a profit, but having made billions for its investors. Very strange. Now, take that one company example. If one company does that, multiply it by 50, 60, 80 companies throughout Silicon Valley, and you got a problem now. Why? Well, back in June 2015, I said a warning for Silicon Valley and San Francisco. This is 2015. Why do you think the housing prices are so expensive out there? It's not because it's so beautiful. It's because the companies around there are people working at those companies, not just executives, but somewhat relatively upper level rank and file people can make $2, $3, $4, $5, $6, $7, $8, $10 million in stock options while working at companies that don't make any money. But the stock price is way high, sky high. They cash in their stock options. They put down a deposit, and then sometimes they even use those as collateral to buy the houses. So you get housing prices, shacks, going for $1.6, $1.8 million, and even higher. So these are companies without profits, and they have high valuation, and eventually I say they will crash in 2015, which will bring the real estate markets and economies down with them. Now, we've talked about this before. The stock market is supposed to be driven by the economy. And we've said it isn't driven by the economy. Indeed, the stock market drives the economy. That's why Trump is worried, because he knows, for example, in Silicon Valley, if all these non-profitable companies all of a sudden go down to to a reasonable valuation, which would be really low, because if you don't make any money, I mean, maybe you can assign some price sales ratio. I mean, sales that are unprofitable aren't really worth much. Then maybe they're not worthless. But the point is, many of these companies are worth billions and billions of dollars. They have hundreds and thousands of people that work at these companies. And they're the ones holding up other than foreign investment, but they're the ones holding up the entire Silicon Valley, San Francisco Bay Area real estate prices. And you have that dynamic in a few other parts of the country. So one of the things that I mentioned way back in 2016 when I was on the X22 report, and it was, what will Trump do if the stock market crashes? And many were predicting at the time when he first came into office that he was going to be the bag holder. And then, of course, as the stock market rose, they said this guy's crazy. Why? Well, he's taking credit for the stock market going higher, and he should know that at some point he's not going to be able to drive the stock market much higher. And then they're going to collapse it on him, and he's going to be the bag holder, and they're going to blame him for it, and he's going to look like a buffoon. Now, you would have to think he's not that stupid, or maybe he is. I don't know. But what I have to think that he does seem to have some type of political and commercial savvy, that he would realize that it doesn't do him a lot of good to take credit for something and then have it all blow up in his face. So he'd have to have some type of plan B. Now, the plan B could be he knows that he has the plunge protection team. He knows he has the exchange stabilization fund. He can just view this as a correction. He calls for people to buy the dip. And by the middle of next year, or way back to where we were, that's one possibility. Now, we've seen this before. We saw at the beginning of 2015 and 2016 steep market corrections, and they just rebounded and they started heading higher again. As I always say, once you reach the point of valuing companies like Tesla based on no earnings, you can make up whatever you want. You can't say Tesla's worth whatever it's worth on any reasonable valuation. It doesn't have any profits, and it's not going to make any profits for the foreseeable future. So that stock, for example, I don't even know what that one's down. If that's down 40-60%, you could boost that one back up with news. Now, I don't know if they're going to do this. Now, if Trump wasn't president, somebody else was president, I'd say, well, these guys will all get together and they'll do what they can to boost the stock market up. In fact, they wouldn't even allow it to fall probably where it is now. But here's something I think Trump probably knew going in. Remember, who is the enemy to Trump? Silicon Valley. Silicon Valley, because they censor him. The media is all on their side, and he doesn't like Twitter. He doesn't like Facebook. He doesn't like social media companies. Well, they're the prime example of companies that don't make any money. You'd have sky-high valuations, or if they do make money, have astronomical PE ratios. So back in December 2016, I said many of Donald Trump's political enemies benefit from higher stock prices, whereas his rank and file voter probably maybe has a 401k, maybe doesn't. But we know that the bulk of the people who voted for the Clintons and the Democrats out on the coast, many of them are direct participants, and they owe their entire wealth to this bubble, to the everything bubble. Their real estate prices, they owe everything to that. Their jobs, where if they were working somewhere else, they'd make $70,000, but instead they're making millions because they're working at companies that have massive stock appreciation, and they've bought houses where they've maybe gained $600,000, $800,000, $900,000 in equity in the past 3 or 4 years. So many of Donald Trump's supporters, I argue, do not benefit from higher stock prices. Yes, some people have 401ks, but they might not even have that much money in them compared to these other people that have fortunes tied up in them. And I said, I asked back in December of 2016, how would a Trump administration react to a stock market crash? And it says, last week I sat down with David, the X22 report Spotlight, to discuss how Donald Trump might react to a stock market crash during his administration. And here is the interview here. Okay, what I said in that interview, and I think he still might do this, whether on purpose, knowing that this was going to happen, or intentionally. He may have indicated today in what he said. He said there are companies out there that have high PE, that have lower PEs and they're good values. He may change his whole narrative from, instead of bragging about the stock market, start talking about the economy. Well, he'll start calling the real economy and not this nonsense in Silicon Valley, not this Tesla style stuff, but companies like steel and all the companies that he likes to brag about, what he calls real companies and so on. And now this all fits into, again, a very populist notion. He can trash these Silicon Valley elites, the coastal elites, and also trash the Fed along with them. So I think he's going to play another populist hand here. And he's going to, if he can't get the stock market back up, or he won't get the cooperation from the Fed, from the banks, from the plunge protection team, from the international banks like the Swiss National Bank, and they're not going to buy the dip, and he can't get people to buy the dip, I think he's going to switch his tact into good riddance to these people. They caused the bubble. They caused the problem. Blame the Fed. Blame Silicon Valley. Blame Wall Street if you have to. And I think that's his only out is either to boost the stock market back up if he can get them to play ball, or to go a 180 and disown the stock market and start talking about how the real economy is doing well. It's because of the tax cuts. It's because of his trade deals. It's because of his new NAFTA deal, whatever he calls it. I think that's where he's going to go. It's because he's going to claim victory over China. We're making stuff again. And then, if they continue to raise rates in an effort to knock him off, to knock the stock market down, well, at some point, rising interest rates are actually a good thing for the economy. If you remember what happened to Reagan, and Reagan comes in and you got Volcker and he's on a rampage. He's raising interest rates. Basically puts Carter out of business because the economy is horrendous. Raises them all up to 20%. The first 2 years of Ronald Reagan's administration, the economy was so bad they thought he was going to be a one-termer. It was over. And then finally, it broke. And it was morning in America. And it's quite possible, and that was a real economy because the rates had risen up to 20%. They started lowering the interest rates. The economy came roaring back, the real economy. And that wasn't stock market driven. It's possible, if the Fed wants to have at it and raise interest rates to 4%, which they could get to, they might get over, they get to 3, you might start seeing actual savings, and you might see a lot of busts and bankruptcies when the interest rates get too high. And that might all clear up. It might be not enough time for 2020, but raising interest rates is actually a good thing for the economy, even though it's bad short term for sure. So the question is whether they're going to extend and pretend this thing a lot longer, or they're finally going to say, you know what, now's the time to bring it down. Trump's in office, screw him. We've had it with him, and we're going to let the stock market fall, and we're going to raise interest rates. But Actually, that's the good thing for the economy. Now, whether the economy will be out of the woods in 2 years if they keep raising rates, I don't know. But I think that's where Trump is probably going to play his cards. Let's see what you guys think over in the comments. All right, let's see. A lot of comments, I'm sure, in the live chat. Merry Christmas, we say. Trump was making sure to double dip. Sean Fulcott, rarely ever get the chance to join a live chat. Well, welcome, Sean. Good to have you. Who is here? Merry Christmas to all. La Plata Peak. If Trump doesn't want people to panic, he shouldn't be, panicking. Exactly. Well, Mnuchin shouldn't have said, hey, I just checked with everybody, and by the way, I checked with the FDIC. It looks like everything is fine. Who asked you to check? I wasn't even thinking about the FDIC. You're absolutely right. Jerry K., first time live. Let me thank you for all your efforts to educate us. Well, thank you, Jerry, for joining us today. Philip Kennedy of Kennedy Financial. Go check out that YouTube channel and that BitChute, Kennedy Financial. Merry Christmas, Lewis. Just sent a very small LTC tip. Thank you. Trump is wrong. I get the LTC tip. Oh, that must be Litecoin. Well, thank you very much. Always good to have Litecoin coming in. Trump is wrong. DBTFD Phil. Don't buy the... Okay. Roger Henley, all the way from Australia, weighing in. Trump is a crook just like the rest of them. Trust the plan. If you don't, then you're not patriotic, says Roger Henley. La Plata Pig, imagine having a running nose, itchy eyes, congestion, and a sore throat, and your doctor telling you shouldn't worry about cancer, and if it were, they could fight it. This is roughly what happened on Sunday evening when Treasury Secretary Stephen Mnuchin, says La Plata Pig, put out a press release on calls he'd held with executives from the largest banks. All right. Dr. Medesco Esquire. How many Americans own stocks in Chinese company? Seth Shepard is here. I hope everyone had a nice Christmas. All right. Max Strong is here. Season greeting. Roger Henley says it's Boxing Day. Mate, Boxing Day. We don't have that in the United States. And you have that in United Kingdom, and you go in Canada. Mnuchin compared to Gary Cohn. Cohn was snatching documents off the president's desk. All right. Roger Henley, how long will it take for cryptos to have their own plunge protection team? I actually wrote an article back in 2013 or 14 satirizing that exact point, Roger, that once they embrace cryptos, that they would eventually have crypto bailouts and plunge protection teams and so on. All right. Dr. Menesco is talking about Chinese stocks and equities. Yes, there's a documentary called The China Hustle, says City Guyable. Yeah, I'm stunned with these people who continue to praise China and that think that China's like the best and it's going to crush the dollar. It's all about gold. They think that China's got it going on because they got gold. They have so many problems, so much debt. Oh, but what about the United States? Every country in the world has debt. The difference is China is far more addicted to debt in its economy, is just not anywhere near being able to crush the dollar. And the only reason I have no idea why anyone would want, unless you're a Chinese national, why you would want to cheer on China and go against the United States if you live in the United States. It's not like you'd be better off if China crushed the dollar. Well, I guess you think that somehow you're going to be running the world because your 2 gold coins are going to go higher. That actually, the gold is going to go higher, probably as a result of a Chinese Ponzi scheme collapse. Will make people realize that the debt is really out of hand. But right now, let's take a look where gold is. Are we getting any movement on it? Nope. Still $3.30 higher. Yeah, that's the other thing about the plunge protection team, the exchange stabilization fund. They can whack gold anytime they want. That's the real shame of it. The only way they can prevent that is if people actually rush into the metals on a physical level, which... What happens now? What do traders do when if they want to rush into safety? They buy a bunch of dollars, they buy treasuries, or they buy GLD. They don't rush into the metals. They've managed to control that portion of the market. And of course, I don't think that you would rush into Bitcoin or Litecoin as a safe haven. You might rush into it as a speculative metal, but I don't think people rush into it. So that's how they control the game. Look, if the United States is the issue right now, which it really isn't because the Chinese stock market has also fallen a tremendous amount, but if somehow the problem is in the United States, they still buy dollars. That should tell you something. If there are 84 million Litecoins, says Ken Jacobs, and 21 million Bitcoin, why is Litecoin not a quarter of the price of Bitcoin? Well, I used to track that for a while. It's not even close. Well, there's a number of reasons for it. It's not so much. Philip Kennedy has also, we've discussed this a few times. There is an argument that obviously the ratio should be closer, but Bitcoin has far more wallets, far more miners. It's got a much bigger infrastructure. That's the short answer of it. Now, there are other advantages of Litecoin. This is what makes it so hard to price these things. It's not just so much, well, there's 84 million Bitcoin, 84 million Litecoin, 21 million Bitcoin. Therefore, the ratio should be 4:1. And the ratio is unsustainable. We hear that nonsense with the gold-silver ratio. All right. Let's carry on. Why would Wall Street care if cryptos go the way of the dodo? Because Wall Street cares about anything they can make a killing from. Roger's taking the point of view that I take, that Wall Street loves stuff, not because they believe in it, like global warming, because they can get carbon credits. They can trade that stuff. Doesn't cost anyone anything to create a carbon credit. What is it? See, the problem with a housing bubble is you got people living in houses. It gets very messy. Problem with stocks are you run into valuation issues. But carbon credits and cryptos, you can just make up whatever price, get everyone interested, trade them, derivative them, store them, sell them. I mean, that's a dream for bankers. They keep saying, "Oh, but they're a threat to the dollar." No, they're not. ICOs aren't even currencies. They're just tokens representing an interest in something, and they can say that something is worth whatever, and it'll go higher. And the same with Bitcoin and Litecoin. Bitcoin and Litecoin don't have to be dominant world currencies. They could be niche currencies. They could be integrated into payment systems. They can easily make a fortune off of crypto. So that's probably why I think 2019, that'll be one way they say if they're going to crash the markets, they're going to allow them to go down. They're going to lose some revenue on that side. Maybe they pick it up on bringing ICOs to market and pumping up that stuff and getting trading platforms going. They've already got that stuff in place. They're just waiting for regulation clearances in early 2019. Trump said the debt isn't a problem for him, says Dr. Modesto Esquire. Obama said the same thing. He said, well, eventually it's going to be a problem, but not now. And Trump is basically saying the same thing. They're all into the whole kick the can down the road. That's not an issue until it is, as they say, the goalpost. Let's see. Well, Dr. Modesto, the reason the stock market is going down is not because of the debt. The debt's been out there. It hasn't changed. The stock market is going down because of uncertainty, Trump turmoil, and because they're probably allowing. Nothing really has changed. It's not like something came out. What's happened is you have rising interest rates, which was a known. You have a Chinese trade war, which was a known. You've got companies that are overvalued, which was a known. So they're just going down. It's not like all of a sudden there's been a sovereign debt crisis. But, so it's really, it doesn't take much when you already have so much turmoil in the markets, so overvalued. If it's not going to be continued to be supported, it's like pulling the pin out of it and having the whole thing fall down. So it's hard to analyze this in any rational way because the market itself isn't rational because there isn't really a market. It's a manipulation. All right. Maybe Jerome Powell's a closet never Trumper. Yeah, that's quite possible. I think they're all never Trumpers. And going to deflate the stock market he can do it as a punitive action, but he can also do it. It makes sense to do it. The Fed has always said they were going to do this. A lot of people have just ignored them. They have said they're going to raise rates. Janet Yellen said she's going to raise rates. Never did it. She did it once. They've all said that they're going to normalize the rates, and they've all said that. And no one thought they would do it. Now they're like, yeah, okay. You don't think we're going to do it? Watch this. Trump's in office. We'll raise him to 3%. All right. And Holloman is here. All right. Let's see. Max Strong gave up on Orange Man bad. But then he's pulling out of Syria and Afghanistan. Plus he's fighting for the wall. Okay. Lewis, why don't you do video live streams? Looking at an official X22 for looks sharp. Oh, yeah, let me get rid of that. Actually, that shouldn't even be up there. That's just a waste of time. Seeing my face. What you want to see. Yeah, live stream, I don't think you want to see my face. That's not very attractive. But you are looking at it right now. So let's get rid of that. And let's put up some game-changing mugs or something that's much better looking than yeah. Here's a cold one. There you go. That's what you want to look at. Smaulgld mugs. Okay, fiat should have died 10 years ago. There you go. Max Strong. Watch Murdoch. All right, what else do we got here? Okay, Cliff High's WebBot prediction. Less than a week for Bitcoin hit 100K. For just $99 per report, you can learn this. Yep. You got to listen to Valley Low. All right, Loco 1J. Kissinger helped transfer American manufacturing to China in the 70s and 80s. Now we have to transfer American high technology, Russia and China via Israel. Okay, I need 2 more months before I get into cryptocurrencies legal issues. All right. All right, well, it was good having everyone here this evening, and we will see you tomorrow. Tomorrow will be, the markets will be open. We'll see what you guys think, and we'll see if Trump's exhortation to buy the dip is going to have any type of impact on the markets. Thanks very much, and don't forget to order your Smaulgld mugs. Go to smaulgld.com, and we will see you tomorrow.